Ladies and gentlemen, good morning. Today is 11/11/2020, November 11th, 2020, and it has been a crazy market recently, and there's lots going on. We had, I'm losing track of all this, but a couple weeks ago, we had a big upcycle in the market, and we had a bunch of open trades, a whole boatload of open trades, and then some of them came out with earnings and got closed, and then some of them got caught up in this like the election volatility, I guess you could call it. And so there's been a lot of crazy stuff going on, as you know, watching the market and really big moves. So past few days, like the momentum stocks and tech stocks have gotten hammered, the previous winners, whereas some of the what I call garbage stocks that have been laggards had humongous rallies. And so um, big news cycle going on right now. I'll pull up the chart here. Big news cycle going on right now. You got election turmoil, sort of. I mean, you had the election, right? And so let's see, election day. Where was election day? Was right here, right? And then after election day, you had this huge rally, kind of, and it started basically a couple days before the election. This sell down right here was relatively decent duration of a little pullback in the market, and then right during election week, I mean, it just took off. And you had this runaway move, right? And then on Monday, we came into I mean, when I sat down at my desk and flicked on CNBC, I think the Dow was up 1,600 points or something crazy like that. And so, the Dow, the Nasdaq, and the S&P, the three major markets, were up. Geez, I'm thinking like 4 or 5% or something like that. And so it was really outrageous to come into that. And then, um, honestly, the SPY actually shows you actually is a better representation of like what happened on a particular day, right? For some reason, the open on the S&P can be, kind of, well, the actual opening price of the S&P 500 index is typically a little bit different than the SPY, which is a better reflection of what actually happened on any given day as far as like the opening price and what transpired subsequently. So I like to look at the SPY to see like where the actual open was. And so as you can see here, it literally they rang the opening bell. It opened at the high, and then the market just dropped the rest of the session fairly significantly, right? I mean, S&P 500 was up like 4 something percent right around the open, and then it ended up closing up higher by like 1.79% or something like that. So it was a wild day, but it was just weird because, the market opened at an all-time high in the history of the world and dropped all day. And meanwhile, on watching CNBC and all the festivities there about the market rally just seemed kind of funny because, the rally happened overnight, which happens a lot. I saw a chart recently that showed um, well, I've seen a couple of charts that basically shows that for years now, the bulk of the gains in the S&P 500 have come in the overnight session. And so you get like these crazy gap ups. And in all these years I've been doing this, I still am not 100% clear on, something like, well, let's take an airline, for example, right? So, yeah, I mean, I understand the idea of like aftermarket trading and pre-market trading, um, but I mean, and I also understand the idea of, when there's like a lot of when a lot of people, investors, air quote, want to buy a particular stock and there's more demand than supply. I understand the idea that the market makers have to raise the price, but I mean, these kind of moves like this, based on an overnight rally on vaccine news, I mean, the difference between the close and the open here, it would be interesting to see like every single trade in this stock that transpired. And see, I don't know, maybe this thing trades overseas or whatever. And so there, people were bidding it up, maybe some brokers, trade this stock all night, but it just seems odd to me. And I don't, like I said, I don't fully understand the dynamics of these kind of gaps, and especially when you see them market wide. See, that's what happened on Monday. Is it was literally like this market wide, humongous gap up on just about everything. Um, a lot of these, a lot of the beaten down stock, on the vaccine news, positive vaccine news from Pfizer, which we're now learning. Um, and this has been going on for a while. I mean, since like summertime, the market's been rallying on, quote, hopes for a vaccine is what Reuters likes to call it. But um and then, you get this positive news out of Pfizer or whatever, but it's like the algos trade on these headlines or whatever. And so and then, as the days progress, like I heard some guy this morning say that he didn't really expect, like, well, of course it was a money manager. It's funny how the money managers all seem to have these knowledge and opinions on this vaccine. But anyway, he said he didn't expect it to be, widely available and distributed, and all Americans being vaccinated until like 2022, right? So anyway, I mean, look at the give backs on this too, right? Pretty outrageous. So let's see. There was, the Carnival Cruise Lines, big spike up. I mean, these things are so really beat down, and they have these like sort of temporary spikes. I bet you could go back here to June, and you probably had something almost identical, with the airlines and the cruise lines and all that. But hey, who knows? It is what it is. Energy had a really big pop on Monday. Actually, I like to look at XOP better, but energy, real big spike up that's sort of continued. So that's kind of interesting. Price of oil's been going up. There's lots of weird stuff going on. And then on the opposite side of the coin, you have these like like uh these high flyers like Zoom, right? The stay-at-home stocks, as Kramer likes to call them. I mean, stay-at-home stocks got hammered. Well, of course, this was an earnings drop, but this I was looking through some charts last night. Coop is probably a great example of how sort of dysfunctional the market is right now. I mean, look at the numbers here, and look at the volatility in this thing. Just sort of all over the map, right? Look at that 3 day run up, and then, gives almost all of it back, and then, well, today, rallying up a little bit. So, sort of the theme is like, tech stocks, stay at home stocks. Look at the Nasdaq, right? I adjusted this top line instead of having it go across the top here. So the Nasdaq 100, it had that big gap. Well, actually, yeah, it had that big gap open on Monday, and if I went to a candlestick chart, you'd see that was like a big bearish engulfing candle, right? And it's interesting because the Nasdaq opened and, made a lower high, whereas the S&P obviously opened and made a higher high. So it's all just and there's just a lot of craziness going on. And then of course the Dow, the Dow's kind of in its own little world here too. Dow opened at a new all-time high. Here's something interesting, and you guys that have been around a while know I've been talking about this forever, but if I go to this candlestick chart and I set this on net change, right? Like that's the so here's Friday and here's Monday. If I set this to just color the candles, like I see a lot of people do this. They have a candlestick chart like this that shows that, because it was higher this day, because it closed higher than on Monday than it did Friday. It shows a green candle. But when I look at this candle, when I look at a green candle, I assume that, a green candle, I assume that the bottom part is the open and the top part is the close, right? Well, that's not correct. It opened at the high and then dropped. And so just, if I'm looking through a whole bunch of charts, this is like so misleading. And for 10 years on this show and the other shows we used to do, and we used to do the show on Wednesday night, I mean, we've always talked about the smoke screen that Wall Street throws up, which is, comparing every day to the previous day's close without, discussing what actually transpired that particular session. So anyway, long story short, um, in order to really get an accurate view of something like this, you have to go with open versus close for the color of your candle, because now I know with this candle being red, and of course, that's why I like to look at these at open, high, low, close bar charts, because it makes it real easy to see what actually happened. The market gapped up and then dropped all day. The Dow did anyway. And so on a candlestick chart, um, if you're looking at a candlestick chart and this is green, then subconsciously, or at least for me, if I look through a whole bunch of charts, subconsciously, you're getting sort of misled, I guess, would be the what it is, because at least with this being red, I know that the close on this candle was down here. Right? And that, yeah, I mean, sure, I can see on the chart that it closed higher than the previous day, obviously. But if this candle was colored green, and suppose it was a stock that I was just looking at that I didn't really know what happened, if this was a big old green candle, I would assume that, other than the fact that you can see the price obviously here, but going back in time, that's so it's not going to actually show you the closing price on this. But anyway, so I didn't mean to digress, but it's just one of those kind of crazy things. So, but look at this, the Dow. This is kind of amazing because the Dow has actually held that gap up, or well, I shouldn't say the gap up. It's held the low there. So, as of right now, I mean, theoretically, there's a bunch of support right there. These sort of runaway moves like this, they got to make you a little bit nervous, because I mean, they typically, like, look what happened over here back in, this is a pretty good example, I suppose. Back in May, you had like sort of breakaway gaps, they call them, runaway moves, parabolic moves, breakaway gaps, basically where, you get a gap and another gap, and then you get a few days where, just sort of goes parabolic. But you can see that, it gave a lot of that back, but not all of it. So, but anyway, these ETFs like the DIA and the SPY and that give a much better sort of indication of what actually happened in the market. Is overnight, they reflect the overnight gaps a lot better than trying to just pull up the index. So, um, but anyway, so it's a real sort of weird market, because a lot of the stocks that you would expect, sort of participated in the rally, did the opposite. As a matter of fact, I saw something on Zero Hedge that said that Monday was like the worst day in the history of the stock market for like long momentum stocks. Something else. It's one of those strategies that they put together, but just crazy stuff. And anyway, and we're in the middle of earnings season too, so it was definitely an outlier of a day. And so you could read about that. It was too complicated to explain. I'm not even sure I understand it myself, but I know that I just saw a lot of crazy stuff. Um, I saw a lot of garbage stocks that had humongous double-digit rallies, and I saw a lot of the favorite, sort of what had been the favorites in the tech stocks, get hammered. Right? I mean, just hammered. And even though the Nasdaq 100, see, here's the thing about the Nasdaq 100, is basically five stocks, and But there was, and then you on the flip side, there was like this broad participation because all of a sudden, the Russell 2000. There's the previous. Look at this. This is, I can't even go back. It's over 2 years ago. I literally have to go to a weekly chart to show you this, which is amazing. So this was the previous high on the Russell 2000 back in summer of 2018. Right? So in the summer of 2018, the Russell 2000 hit its all-time high, which this trend line goes back like nine. I had to go to a monthly chart to look at that, but as long as I'm here. Well, no, it's all skewed now because I have a log scale here. Let me try this. All right, so here's not log scale, but so look at that. That trend line goes from like literally the bottom in March of '09, the bottom of the big bear market, and goes up and connects all these highs to the summer of 2018. And it took until the fall of 2020 to come back and actually, hit a new high. And as we speak, it's a little bit below it. But yeah, so I mean, this is just some crazy stuff. And you can see obviously on this chart how nasty the Russell 2000 has been. Like that pandemic sell-off in the Russell 2000, just incredible. And of course, everyone knows that there's been sort of since 2018. If I don't know if you guys remember this, but in December of 2018, the market tanked. Right? It was really an anomaly because typically at the very end of the year. Like right now, we're in like seasonally the strongest time of the year. Let me go to I can get that on the weekly chart. Seasonally, we're in the strongest time of the year, but boy, in 2018, the market basically sold off and didn't turn around till Christmas Eve, right? I think you guys probably remember that. I mean, people were panicking. Uh, Treasury Secretary Mnuchin was convening the plunge protection team and calling banks and stuff. And I mean, and they turned it around. I mean, they managed to somehow or other they managed to V bottom the market. But the fourth quarter of 2018 was just brutal. And then, of course, here's your pandemic sell off, which was even worse in the Russell 2000 than it was in the other indexes. But so, there's just a lot of weird stuff going on. Um, and I don't know, I honestly, I don't know what all that means. But as far as the individual stocks, what it did, the effect of that, and here's the current open trades. We only have 3 open trades right now. We had we had one really big winner closed yesterday or last night for earnings. It was this BRKS. Yeah, there you go. I mean, this thing just exploded. And look at it today, right? This is today, right? Yeah. So, here's the thing. We had to, based on the strategy we're using here, had to be sold at the open yesterday because we typically don't hold through earnings. And the reason is that thing could have, opened down here. But we've seen a few stocks here recently that, you know, they rip higher like this, especially tech stocks. But yeah, they rip higher into earnings, and then earnings come out and they just tank. And so I've gone through practically every show here. Every other show I've explained why, we don't hold a stock over earnings. So anyway, and then a portion of the time you do get a move like this. But so that thing got closed out. I hadn't actually moved the stopper target or anything on this, but let's look at the open trades here. AMD still an open trade. It's been kind of rough. I mean, AMD's been kind of a rough way to go because it really took off, and then this trailing stop now is sitting right here at 77. Let me see if I can get that. So it's a little bit lower than this. These charts never want to cooperate when I try to. I think what I need to do is move that over a little bit. Oh, That still didn't help. You know, the other funny thing about Monday is not really funny, but the other thing about Monday is that I was seeing all these like reports of all the trading platforms being down, and so people that wanted to like on that huge gap up, people that wanted to actually sell. Um, Boy, this is frustrating. I typically don't have much problem with this, but I'm just going to leave it there. Yeah, so the trading platforms were down, like Fidelity, Schwab, something like that, and which is crazy. There was, they say Robinhood was up, but all right. So anyway, this is, AMD, extremely volatile stock, and interestingly enough, this trailing stop had not really come up very much, right? So this could have, this could have been the one of those ones. If Monday had been an up day in this stock, if it had closed like in the upper part of the range or above this high, this trailing stop would have been way up. Well, I wouldn't say way up here, but it would have probably moved to around break even and gotten stopped out yesterday. So it'll be interesting to see what happens here with this because AMD has a lot of big ups and downs here, and right now it's just kind of it's trying to hang on to. Well, I mean it gave back most of the rally, but it's trying to hang on to kind of the middle part of this whole new trading range up here. I mean basically it ran up and created had this all this stuff back here, but had this big rally back here um, in July and August, and then now it's in like this gigantic sort of trading range up here, and at a whole new level. So let's move on. Walmart. Current stop on Walmart is, let's see if I can draw this on here a little bit better. It's 140. So it's only moved up a little bit, which is fine. The idea is that, excuse me, the idea of the trailing stop is that it's designed to keep us in the trade or keep us in the position through normal price volatility, right? And so I mean the trailing stop will sort of creep up based on how far the price pulls away from the trigger price, right? So it's starting to creep up a little bit, but it's still kind of hanging back. And the reason is that, you know, amazingly enough, I mean, even though these are only, it's only got like a couple of percent ATR, average true range. That's all being reflected here, but you've got a lot of sort of long range bars on this chart, and so that's all based on, and obviously what you're seeing here is the previous trade, the previous swing trade, and then it had this pullback, and so so far so good though, right? Theoretically, if we get a close up here, you see just because the price forayed way up here on Monday, you can see that close was like back down here right around the trigger. And so that's why the trailing stop's kind of hanging back right now. But theoretically, if we get a close up here, this trailing stop will come up probably pretty close to break even. So Walmart actually looking pretty good. Now here's the thing about Walmart. They are releasing earnings on, pull this up on my Thinkorswim, 11/17. So that's what is that, next week? Let me just mark it here on the chart. So there's not a whole lot more days for this to, after today there's oh, I forgot to look and see, so they're releasing on 11/17 before the market opens, right? So when a company is releasing earnings before the market opens, that means that, I'm going to walk into my office, flip on CNBC, and Walmart's, either on the 17th is either going to have beat or missed earnings, or, I mean, I would expect that they probably beat earnings, but you never know what the price reaction is going to be. So when a company releases before the open, we before the bell on any given day, we close the stock the previous day, right? Because we don't want to come in. We don't want to come in on, what day is this? On Tuesday morning, and have, going into the earnings release, we got a decent little gain here, right? And then we don't want to come in to watch, that be a loss because it opens down here, below the trigger price. So long story short, we're going to close Walmart on the 16th using the opening price, which means that there's basically only a couple more days for it to do what it's going to do. And another good reason for that you guys are probably aware of is that there's this old and maybe not a stock like this, but over the years everyone knows that there's this kind of sometimes there's this phenomena where stocks like run up into earnings. Like they have like a run up into earnings a few days before, the week before, whatever. They have the run up into earnings, and then the earnings come out, and then they tank. And so that's another sort of common thing, and it's another reason that we close them ahead of earnings. So anyway, couple more days of Walmart. We'll see, today's Wednesday, so we got Thursday, Friday, and then Monday at the open, whatever that open price is. And so sometime, in theory, if you were following along, um, kind of by the book or whatever, you come in Monday morning and be ready to sell Walmart at whatever the price is. Of course, Walmart's an investing stock, and so we've talked about this in the past, probably on past shows, mentioned it. Theoretically, if somebody wanted to invest in Walmart, they could just put some money to work in this. You could get in at the trigger price, kind of take the swing trade, and then just hang on. Maybe use the initial stop. Yeah, who knows? It could be a 2 years from now. Maybe it never goes. Maybe it continues to meander around and ups and downs, or pulls away, breaks away, or something. And there's always like a point on the chart. There's a lot of craziness, but there's always a point on the chart where the price never went back below that. I don't even remember what this was all about back here in March. Well, this was all the pandemic nonsense, is what it was. But anyway, hey, this 142 and a quarter could have turned out to be like, a great entry point in Walmart, and you could come back 6 months from now, a year from now, and never went below that. I'm not sure how much I'd bet on that, but it's always, stock like this. If you buy it and hold it for the next 20 years, chances are you're going to do okay with it, right? So anyway, there's that. Last but not least, Colgate Palmolive, which by the way has hit basically ripped through, just ripped right through the target and the compensation for the gap target, which I'm glad I drew on there. So it makes it easy. And so all you guys know how that works. So basically, and look where it's sitting. I mean, it's basically sitting, right at the actual target that you would use if you just jumped right on in this day, when it triggered at the open. And so looking good. Now this trailing stop is moved up here. And these trailing stops with the volatility that we're seeing, and I guess it's sort of just it's also a function. It's a function of the volatility of the individual stock, but it's just a function of sort of the nature of things right now. Is that these particular T stops are kind of hanging back a little bit, right? And like I say, it's I don't. It's obviously it's not just it's dynamic. It's not just based on like a flat ATR. And I know that because the longer a trade is open and the more that it goes up, the more that trailing stop's going to tighten up, tighten up, tighten up. And so that's the dynamic nature of it. But it again, it is based on the ATR of the individual stock. And the interesting thing is that when Jeffrey programmed all this, it's not just it's not just like your ATR 14. Like everybody puts a 14-day ATR on the chart, which is kind of weird because it's 3 trading weeks minus 1 day. So you'd think like if you were gonna make like a 3 week ATR, it'd be ATR 15, like 15 days or whatever. So, but anyway, so we use like Jeffrey uses like a hybrid monthly ATR where he takes basically like the entire month's worth of price action, and if I'm not mistaken, he massages that data by taking out the biggest and the smallest moves, and then that's where he comes up with this little hybrid ATR. But anyway, that's just the hybrid ATR is just a little part of what drives the trailing stops, with the idea that the trailing stop starts off wide and then it tightens up. So that's basically the gist of it. So anyway, Colgate Palmolive looking pretty good here. These prices are delayed on these charts just because I'm still using this old version of free stock charts, which decided that the data was going to be delayed. Just like one day when I woke up. So I just, here's the thing: is I like Finviz charts when I'm looking at a stock, but I can't just draw on them like this, right? And on my trading computer over here, obviously have Thinkorswim up, and trying to real quickly mark up a chart like this is just, oh man, it's tough. You guys, do this? No, it's a lot tougher on Thinkorswim. Um, you can't just like blaze through and mark up these charts like I do. I mean, I've been using these things for however long they've been out, and there's a couple other ones out there that eventually I might have to switch to or whatever. But everything about these just makes it really super easy for me to. And those of you that see me do this for a while know how easy it is for me just to mark anything I want on a chart quickly and easily, and I know these things like the back of my hand. So I've never found a charting platform that was faster and easier to draw on or put indicators on or do anything I want with than these free stock charts. Now, the paid version of these is TC2000, which has been around forever, and I'm gonna guess that TC2000 is practically the exact same thing, only with real-time data. But here's the thing: is I already have real-time data on my trading platform, right? And so it doesn't really and I mean, I have all kinds of stuff. Stuff that I already have a lot of stuff that I pay for, and and I have the Thinkorswim or whatever, and so I don't see the point of paying for TC2000. But I'm going to assume that it's very, very similar to this as far as being able to mark up these charts really quick. So I guess eventually when free stock charts is no more, and the reason is, you see this? This is built in the programming language that Microsoft invented called Silverlight. Like if you try and right click on something in here, it just says Silverlight. So this program's built on Silverlight, which Microsoft, like, I can't even imagine, how much time and effort was spent to develop an actual programming language that's able to create something like this, and then they just scrapped it. They said, well, it's like it was supposed to be their answer to Adobe's Flash, which, by the way, Adobe Flash is going away at the end of this year. So it's just been I don't know. I mean, the Adobe Flash has been around for a long time. It was, back in the old days, it was one of the first things that sort of opened up the internet to video and cartoons and I mean, it was revolutionary, but I guess it's just the way it was created or just the nature of it, it's been extremely vulnerable. And I guess they figured out there's just no way to there's no way to make it secure. Um, it's like every other time I reboot my computer, I get a Adobe Flash Player update for the past 5 years or something. So, um, anyway, speaking of Adobe, I haven't looked at I haven't looked to see how their stock has fared through all this madness. Yeah, so um, you can see the sort of the madness. I mean, the ranges that are happening right now, and this is what makes it tricky too. We're in kind of a tricky little environment here because, with all I mean, it's one thing for, a stock to have like these little cycles, or, sometimes you get a couple day, like, big sell off in the market for a couple days, or you get a huge rally, this might have been earnings or something. But this latest sort of cycle here, this was a really nice sort of pullback in, really, in a popular stock, right? And so, I mean, this isn't one of our trades or anything, but I'm just sort of theorizing here that, Adobe's always been, and so, you look around for these kind of setups like this, and then you'd think, okay, you got a little pivot low going on here, and this Adobe was like, and there was a lot of stocks like this, just a random example, setting up here. And so what you'd be looking for is like a little consolidation, a trend line break, and then move back up. And so look what happens. When was this? A week ago today, right? Humongous gap up, and that could have been earnings. I don't know. Um, I suppose one of the benefits of TC 2000 is maybe there's like a little earnings label there. So I may actually have to pull the trigger on that. But um, anyway, so I mean, look what you get. You get a humongous, crazy gap up, a gap up the next day, and then this is a good example of what's transpired the last few days as the market itself is hitting all-time highs. And I saw people on Twitter that were saying that I mean, all day on CNBC, it was like they were talking about the market rally and the new highs and the Dow and all this stuff, and I mean, just incredible. And meanwhile, like on boots on the ground, people were talking about how they were getting their portfolios were getting destroyed on Monday, or just even over the past couple of days with this big market rally because they were holding the certain stocks now. And of course, it's all relative. I mean, and that's another thing that you never hear anybody talk about this except me, right? And quite frankly, I mean, since we have 3 open trades here, I figured maybe I'd just kind of like randomly, talk about some stuff while we're here. But those of you that remember the old Market Toolbox show that we used to do, 7, 8, well, we did it for probably 5 or 6 years, and it was probably, maybe we did it for 8 or 10 years, and it was probably, started 8 or 10 years ago. And but anyway, it's all about everything revolves around where's your entry point, right? Like if you're in Adobe, um, everybody's got a different perspective, right? Like somebody that bought it back here, the buy and hold investor, right? If you bought it back here, say in 2019 sometime, and you're just a buy and hold investor and you hold it through all these ups and downs, well then, hey, no big deal, I mean, you wouldn't want to sell it for tax purposes, probably. And that's why people do buy and hold investing. Um, if you bought it here if you bought it here when it broke out or whatever, then, it was a whole different story down here during the pandemic. The pandemic sell off happened so fast. in the overall market. Now, some of these stocks, a little bit different story. I mean, this was a couple of months of pain here for a buy and holder, but maybe somebody bought it here and ditched out of it, and then maybe you buy it back or you don't, but or if somebody waited until it broke out, here to a new all-time high to buy it, then they're not feeling so good about it now. So I mean, literally everything revolves around your entry point. The way I like to illustrate that is, speaking of drawing on charts, is this. So you take the current price. Whoops, kind of messed that up a little bit. I did it the opposite of how I was supposed to do it. So you take the current price and you say, okay, everything, every time, everybody that bought anywhere in this green is okay, right? Like Adobe's a good stock if you bought it anywhere in this, or prior. I could zoom all the way out, and then you come up here and you say, if you bought it anywhere up here, then you're underwater, and that's just how it works. And so and you could like take any stock and do this with the current price, right? You just draw a big green square. You take the current price and everything below it's green and everything above it's red. And so, whether it's a good, company or a good stock or a good investment, I guess probably the most reasonable way to characterize it would be to say that Adobe's a good investment for everybody that bought it, at, at a level that's in this green area. And Adobe's not, so far is not a good investment for everybody that bought it at a price level that was in the red area. And so, like, literally every single stock is like that, right? I mean, you could take a stock like this Zoom. This would be an extreme example because I guarantee. And so, same sort of thing here. You just basically, this is a good example because it's like this is probably the poster child, as they say, for the stay-at-home tech stocks. The momentum stocks that are popular. And and the valuation on this thing, I don't really follow this very carefully, but the valuation, it's like some insane price to sales or whatever. But same concept here. And so you just don't really hear them talk about it, right? Like it's sort of, I mean, it's the most obvious thing in the world, but so, anybody that bought Zoom back here in this green area is, or even prior to that, I only zoomed out so far, but I mean, look at this, like there was a trade in it back here, but anyway, so, great investment for anybody that's in the green, so to speak. And, and then there's a lot of pain, I'm sure there's some pain out there. I mean, if you look at the scale of this chart, I mean, this thing was pushing $600, right? And now it's below 400. So, um, yeah, and I mean, it's extremely volatile. Now, they just came out with earnings too. So this is another example of this is an example of why, we don't hold over. I think this thing was going to trigger, but earnings were coming out, and so this was actually after this pullback here. This was on like our pending list, but I mean, and so theoretically, this thing could have triggered like right here, right? And so I remember this, but earnings were coming out, and this is, I guess you could say, this is one of the perfect examples of why the system's set up so we don't hold over earnings, because this day, let's see, it closed at $500. Well, that's easy to remember. So it closed at $500. They came out with earnings. Next morning it opens at 432. So, with these high dollar stocks, right? Like what's Amazon's like $3,000 or something. In my mind, the way that I sort of, and it's just a funny little thing that I use to kind of get my head around like really super expensive stocks is I picture having like $500 in my wallet, right? And then as opposed to having $432 in my wallet. So, if I had $500 in my wallet and then um, I went to a bar or something and woke up the next morning and I had $432 in my wallet, I'd be like, ah, geez, it was a rough night. So that's kind of, and especially like with Berkshire Hathaway or something like that, you just kind of visualize having a certain amount of money, and then I mean the price changes are just drastic in these high price stocks. So I don't really, obviously when you're trading, you want to think of everything in percentages, but just the price changes that happen on sort of a day-to-day, week-to-week business, or yeah, day-to-day, week-to-week, with the stock price changes, I sort of in my mind I like to look at it as how much money did I have in my wallet. So anyway, all right. So anyway, real quick, there's no pending trades right now. So these open trades right here are just gonna sort of play out here. The market's gonna play out. Hopefully, all this craziness will settle down a little bit. Um, and there's a lot of craziness. I mean, the presidential transition thing is sort of a wild card. The pandemic, I mean, I'm reading like these other countries are locking, there's lockdowns happening in places, shutdowns again. And I mean, you guys remember that the whole pandemic sell-off was sort of based on, everything shutting down. Um, and so, I mean, it's obviously, it's not over, and there's so much controversy surrounding everything. I mean, it's a miracle that the market is where it is, but I mean, everything is just so, they used to say that the market hates uncertainty. So the big thing is this morning is that, well, Goldman Sachs raised their price target on the S&P like out to the end of 2022. And so, but the new narrative, besides the positive vaccine news, which is a little sketchy because it's not like it's imminent, right? So, theoretically, the pandemic keeps getting worse globally, right? And we're looking at like, shutdowns and lockdowns in Europe and, the UK and all this stuff. And, cities around here, I don't follow it that closely, but I see the news. So the pandemic's as bad as it ever was. We're facing, more lockdowns than that, but yet the market's at an all-time high because, you know, there's hopes for a vaccine. And that, and the fact that the Federal Reserve's has created trillions of dollars out of thin air. But I mean, there's just so much weird stuff going on, and you just got to kind of balance it all out. And whether something means anything or not, I guess just depends on how the market reacts. I would have thought that I guess you could call the election contested, and I would think that a contested election would be the type of thing that would send the market in a tailspin, right? Until things are settled, but I would be completely wrong. So, I mean, the market loves to do the opposite of what makes sense. I mean, that's basically, and that's been happening for a long time now, is, if something makes complete sense. Oh, speaking of which, I got this particular stock here. They're talking about this they're talking about the cannabis stocks on CNBC, and so like when I'm sitting here, I turn on the TV, and like these couple of days here, the moves on this thing. I mean, it opened this day at $5 even, right? Opens at $5, right? Has a big percent update. But then this day, the very next day, last Friday, it opens at 8, and then this day it opens at 13. So it opened at 5, 8, 13, And I mean, and then this morning I had to read what the news was because, then it opened at 8 and then it opened at, 7. 5, 8, 13, 8, 7. And I mean, that's just insane. And so, um, yeah, I mean, if you calculated the percentages between the opens and then between like the opens and the closes on this, I mean, this is like, yeah, you probably have better luck in Vegas trying to trade something like this. So, um, but anyway, it's just craziness. It just goes to show how nuts the stock market can be, and so there was a story on the way up, and there's always a story on the way down. But I did read the news on. I had to know what the news was on this morning on this because people get burned on this kind of stuff. I've been seeing it to see this kind of stuff for years, right? Like you get this up move, and then well. I mean, look at this stock. I don't know if they've reverse split or if this is actually, I mean, I don't know. I haven't really been following this thing, but I mean, look at this. Um, and so, it is what it is, but I mean, just extraordinary. And so, this is a good example of why, like long-term buy and hold in the wrong stock doesn't work either, right? So imagine now me drawing my red and green squares. I'm gonna do it just for the fun of it and this is a weekly chart. Okay, I won't even draw the red one because I'm gonna end up deleting this, but I think you'll get the point here. Here, let's see. Here, this will be fun. Um, all right, so you know, well, I don't know why I did that. Might as well have 0 down at the bottom here. That's what I meant to do, have 0. So, here's the thing is that the only people that have made money in this stock since, well, I guess you could go back here. I guess maybe they IPO'd back here. I don't even know, but so literally like everybody's underwater on this stock. I mean, everybody, unless you happen to buy it, in the last 8 weeks. But I mean, you're going back years here, 27. And here's the thing: is I mean, I have a feeling, I'm pretty sure that the reason that this particular stock had this big rally here recently was because, and it was going into the election, right? Or it was right after the election, because like several new states legalized cannabis, and so I mean that was the perfect narrative for a pump and dump. Right? Like New Jersey legalizes cannabis. And so it's like, oh, buy the cannabis stocks. And then to make matters worse, you got like these cannabis ETFs, right? And so people think to themselves, well, geez, there's a legalized marijuana on the ballot in 3 states, and then it passes, and they think, oh, geez, get me into one of these. I won't buy the individual stocks because they're too volatile. I'd rather diversify, and so they jump into like an ETF. And so when you throw money into a pot ETF, they just spread it around amongst all the pot stocks, right? And so, people threw money in, they bought all the pot stocks, and then regardless of whatever. And so that's how you get that crazy sort of, pump and dump price action. And then, I don't know about this one, but I do know that ACB used that as an opportunity to come out with like a secondary offering and raise, tens of millions of dollars or whatever. And I mean, just a lot of shady stuff goes on. So this has been going on. This type of thing's been going on since stocks traded in fractions. To be honest with you, but it's just and it still goes on today. So nothing ever changes. But um, and so, it'd be interesting. I'm going to wrap this up here in a second. And I just missed the segment on cannabis stocks tumbling, outlook for pot companies with somebody on CNBC. So, Anyway, so we looked at the open trades. I was going to go over the closed trades, but I ran out of time. I didn't even plan to talk for an hour here. So thanks for tuning in and listening to me ramble on about a bunch of different stuff. But it was kind of a nice little change of pace since we didn't have a whole bunch of stocks to mark up and go over and all that type of stuff. So, anyways, be careful out there. Once the dust settles, we'll start to get new stocks popping into the we'll start to get some new stocks popping into the pending list, and then depending on what happens, they'll trigger in, and so the cycle begins anew. So that's what's great about the way that the system is designed is that it's very cyclical, right? And it kind of ebbs and flows with the tide of the market and takes advantage of that. And so, the short term swing cycles over, a couple of weeks, couple of months. And, in all the time we've had this thing out, the dynamic of it, functioning the way it's supposed to over the cycles is amazing. It really is amazing for like, a fully automated system. So anyway, thanks for tuning in, guys. I'll put the replay up on the show page here in a few minutes, and then I will catch you guys that like to watch live here same time next week.